Hola mi gente, welcome back to the channel. On today's video, I'm going to go over my prediction on how high mortgage rates will go in 2022. Now, if you're new to this channel, welcome. My name is Sean and this is We Are Investing, a channel that's dedicated in investing and personal finance. Please consider hitting that subscribe button, ringing that bell, and smashing that like button so that you can join the community and help support the channel. When you ring that notification bell, YouTube will notify you when I upload more videos. Please be aware that this channel also does have a Patreon. It's $5 a month. It gives you access to a Discord server of over 500 investors. It gives you access to valuation spreadsheets, and it lets you know what stocks I am buying and selling, and it also lets you know what other members are doing as well. A link to the Patreon is provided down below. Now let's get right into it. How high will mortgage rates go in 2022? Well, I'm going to give you my opinion, but to start off the video, we got to talk about what the experts were saying back in December, just a couple of months, and boy, were they wrong. If you take a look at this article from the Mortgage Report, you can see that the average for the end of next year, so the end of 2022, it's February, might I add, the average expert predicts a 30-year fixed mortgage rates could rise to between 3.4% and 4.1%. And you can take a look at the expert mortgage rate predictions for 2022, and they're all below 4.25%. 3 or 4 of them say that it's going to peak at 4%, and just one of them said above 4%. Now, I don't know where these people are getting these numbers from, because to me, it seems that mortgage rates are easily going to surpass 4%, given where we're at with the 10-year Treasury bonds and how interest rates on mortgages are strongly correlated to the 10-year. In addition to that, these experts are wrong, and we know that for a fact because this week, mortgage rates on a 30-year fix surpassed 4%. And we're only in February, so it took 3 months for these experts to be wrong. If you take a look at this article from Fox Business, you can see that 30-year mortgage rates surpassed 4% this week. They actually hit a high of 4.25 on some metrics. I don't know if that's true for everyone, but I did hear that from another YouTuber. But anyways, Fox Business said that this week, the 30-year fixed mortgage rates surpassed 4% and hit 4.125%. And according to NerdWallet, the average 30-year fixed mortgage rate right now is 3.96%. So just around 4%. Now, it goes without saying that if you were to do a 15-year mortgage or an ARM, you could get a different rate. And also, your personal finances, your personal credit score has an impact on what kind of rate you are getting. These are average numbers for the 30-year fix, which is the most common mortgage that people take out on their homes. But like I said earlier in this video, to try to predict how high mortgages are going to go in 2022, you need to understand the bond market, and you need to have a good understanding of how the 10-year Treasury moves up and down. And thankfully on this channel, we dive into the bond market a lot because we dive into the stock market a ton. That is the main focus of this channel, is trying to find investment opportunities in the stock market. But because we are looking at all of this stuff, and we have been looking at this stuff for a good while, we can make an educated guess on how high mortgage rates are going to go based on what we think the 10-year Treasury is going to do. And if you take a look at this article and this description, why mortgage rates and Treasury yields move together. Historically, the 10-year Treasury yield has been considered a key benchmark for mortgage rates. Fixed mortgage rates and Treasury yields generally move together. Why? As a fixed rate asset, mortgage-backed securities are in direct competition with Treasury investments for investor money. For mortgages to stay competitive in the eyes of investors, the rates on mortgages inherently follow changes in Treasury yields. And that is what we're saying. If the 10-year is going to move up, then mortgage interest rates are going to move up with it. And that's why when you saw this quantitative easing and the asset purchases from the Federal Reserve, they were buying bonds and mortgage-backed securities together. They're still buying these assets, but they are tapering, and they are going to be done buying in March. And it might sound confusing and you might not understand this, but essentially, when people are buying bonds and mortgage-backed securities, that is going to decrease the yield or the interest rates. When you have less buyers, that drives up the interest rates. The cheaper you can purchase a bond, the cheaper the bond is, the higher the yield is, or the higher the interest rates are going to be. We're not going to dive into too much detail regarding this because that could be a video in itself. But where is the 10-year going to go? Because that will give us an answer on where we think mortgage interest rates can go for the 30-year fixed. Now, it was just yesterday where Jeffrey Gundlach, who is known as the Bond King, went on CNBC and said that he predicts that the 10-year Treasury yield is going to hit 2.5%, but could even hit 3% in 2022. And this is from the Bond King. He understands the bond market and the Treasury bonds very well. But with that being said, it is my personal opinion that 2.5% is achievable, but that's the higher end of my range. I personally believe that anywhere from 2.25% to 2.5% in 2022 is way more realistic. The reason being is we are going to see a bunch of rate hikes. But I do believe that the bond market is fearful of an upcoming recession, and that's going to limit how high these yields go. So 2.5 is my higher range, 2.25 is my lower range, and ultimately in 2022, I think we are going to settle somewhere in that range, maybe the higher end if recession fears start to subside. The next 3 to 4 months, I believe, are going to be critical if we can't get inflation under control, if consumer sentiment surveys continue to be lower and lower, and we do not see a stronger economy off of this, then I think yields will have a hard time breaking 2.5%. And what you're looking at right now is a 1-year chart of the 10-year Treasury index. $19.55 corresponds to a 1.955% yield on the 10-year Treasury bond. And as you can see over the last couple of months, since the beginning of the year, the yields have risen, the yields have spiked up, going from 1.5% topping at 2.06%. And they can continue going higher. Now notice that on Friday, there was a 3.75% drop on Treasury yields. And that's because there's fear of Russia invading Ukraine, and also consumer sentiment surveys came out very negative, and that is causing fears of an upcoming recession and economic turmoil. So yields dropped. But anyways, if we take a look at the 5-year chart, which candle represents a week, you can see that we are well below the yields that we had in 2018. The pandemic caused us to drop to levels we have never seen before, and now we are recovering. But we're getting close to a resistance here at 2%. So it's not just going to fly up past 2% in my personal opinion. It's going to take some time. But I do believe that right here, this little area right here is another resistance, and that's 2.6%. And in people's minds, 2.5% will be a next hard resistance for the 10-year Treasury yield. And that's why I think that's the upper end of the range. But given all of the information that we have on the economy right now, and the pressure that the Fed is going to be putting on these 10-year Treasury yields, I think we're going to get somewhere between 2.25% and 2.5%. And with yields currently sitting at around 2%, to get to 2.25% would be a 12.5% increase. To get to 2.5% would be a 25% increase. And it's as easy as that. Once you identified how far yields are going to rise, you can grow mortgage rates to the same degree. So if the average 30-year fixed mortgage rate is around 4% right now, if we grow that 12.5%, we're looking at a 4.5% mortgage rate for the 30-year fix. If we grow that 0.25%, we're looking at a 5% mortgage rate for a 30-year fix in 2022. So my personal prediction on how high mortgage rates will go in 2022 is between 4.5 and 5%. Which doesn't seem like a far stretch given that mortgage rates are currently at 4%. Now, there is something that I want to add here. I do believe we will see a pullback in mortgage rates because of how steep, because of how fast the 10-year has gone up, and also some of this economic data that is suggesting we could see a recession. If this economic data becomes stronger and stronger, then yields will drop and so will mortgage rates. because yields and interest rates are supposed to rise when we have a strong economy. And if we're looking like we're heading into a recession, then they're not going to rise. At least they won't rise as much as we think they can. That's my personal opinion at least, and I'm not a financial advisor. Now, since we're talking about yields, there was a trade that I mentioned on the Patreon that worked out really well. The play was an ETF that trades under ticker symbol TTT, and that follows the 20-year Treasury yield. So as yields go up, so will the TTT. I posted this play on December 21st at around 8:57 p.m. And then on February 10th, I notified everyone that I was closing out of this position. Because yields broke 2% and I thought they would pull back after hitting 2%, I thought it was a good time to take in profit. This trade was buying one leap option worth $750 and then being able to sell them for $1,380 each. That was an 80% gain in just over a month's time. These are the kinds of trades that I like to post on the Patreon. Trades that I think are high quality and will give you good returns. But I don't post a ton because these trades are hard to find. And if you'd like to join the Patreon, you can do so. A link is provided down below. Now, with that being said, let me know in the comment section down below on how high you think mortgage rates will go in 2022. I love to hear what you have to say and what your opinion is on this matter. And as always, please consider hitting that subscribe button, ringing that bell, and smashing that like button to help support the channel. I really do appreciate it, and I'll catch you all on the next video. It's been real, it's been fun, it's been real fun. And this is We Are Investing, and together we are invincible. See ya!